Regardless of your strategy, having a momentum oscillator that determines oversold or overbought levels will be a critical part of your success in trading. One common indicator often used to detect this is the stochastic RSI indicator, known for its ability to detect overbought and oversold levels by oscillating between the 20 level for oversold and the 80 level for overbought. However, there's a far better version of this indicator that filters out market noise, colors the candles based on the buying and selling pressure, provides dynamic overbought and oversold levels, automatically detects several types of divergences, allows you to analyze from multiple timeframes, and so much more. The indicator we are discussing is called Stochastic Momentum Index of Money Flow, or SMI. An indicator that was so good it was chosen as an editor's pick by the developers at Tradingview, and in today's video, we will show you how to get this indicator for free, how to configure the indicator, and we will also share with you a secret strategy that you can start using today. Let's start with the original and basic version of the Stochastic RSI. Click on the Indicator Search tab and search Stochastic RSI and select the indicator under Technicals to add it to the chart. This is the original version of the indicator, and as you can see, the indicator oscillates between the 20 and 80 level, and you can customize the levels of this indicator by going into the settings and changing these options. The way you would use this indicator is once the price is above the 80 level, you would consider the asset overbought and you would wait for a cross of these two lines to take a sell back to the average. For buys, it's the opposite. Now let's add the updated version of the indicator and compare the signals. Click on the Indicators tab and search Stochastic Momentum Index, this one by Andre007. Save it and add it to your chart. As you can see, when compared to the traditional stochastic RSI, we can see that the SMI does a far better job at filtering out bad signals and has a lot more features. Here we can see that the indicator was able to avoid a number of false signals. Let's quickly go over each aspect of the indicator. First, we have the signal line and the TSI line, or True Strength Index. The area between these two lines are shaded to help predict trends. Typically, when the line is blue, this indicates that a short-term bullish trend is likely, and when red, this indicates a short-term bearish trend is likely to form. These lines trade between these dynamic overbought and oversold levels. You'll notice that these lines, including the middle line, adjust as the market volatility changes, making it ideal for adapting to different market conditions. While this indicator is not ideal for long-term trend trading, you can however use the indicator to detect short-term trend trading opportunities. The TSI and signal line maintaining below the middle line would be an indication of a strong bearish trend, and the TS and signal line maintaining above the middle line would indicate a bullish trend. You will also notice that when the TS and signal lines are above the top line, this indicates that the market is overbought and we should not be taking any buy trades in this area, and instead seek selling opportunities. And when the TS and signal lines are below the bottom line, price is considered oversold and we would be expecting buying opportunities. You might have also noticed that when the TS line is plotting below this level, the background color changes to red, and when plotting above the top line, it changes to blue. This allows you to clearly see at a glance what levels are overbought and what levels are oversold. Next, we have these dots. They are plotted with the TS and signal lines cross and will be either blue, yellow, red, or green, depending on where they are formed. A green dot is plotted if we have a cross while the TS and signal lines are below the oversold level, and it is considered a strong bullish reversal signal. Red signals are plotted if the lines cross while above the overbought zone and is considered a strong bearish reversal signal. Blue and yellow signals are considered weak reversal signals, but can still be used in conjunction with your analysis to identify early entry areas. Moving on, we now have the SMI ergodic indicator. This is used to gauge the buying and selling pressure in the market, and the candles by default are colored based on this aspect of the indicator. This aspect of the indicator is not to be used as a direct buy or sell signal, however, it can be used to create confluence and filter out bad trades. When the histogram is above the 0 level, this means you should be aligning your analysis for buying trades, and when below, you should be preparing for bearish trades. If we go into the settings of the indicator by clicking this gear icon, we can see we have a number of options available. However, in this video, we will only be covering the most important options that you need to be aware of. First, we have the timeframe options. This will allow you to calculate from a higher timeframe in order to do more advanced analysis. so instead of switching between charts. If you're on the 1-hour timeframe, you could simply have the indicator calculate from the 4-hour timeframe to see those signals. The Allow Repainting option is useful if you are using a much higher timeframe than the one you're currently viewing. This will allow you to get very early signals from a higher timeframe without waiting for the bar to close on that higher timeframe. We will use the current chart and disable repainting for our testing. Next, scroll all the way down to Trend Alerts. Here we can adjust the candle colors. As you can see, color bars for histogram is on by default, but we can disable that and have the bars colored based on the TSI line or signal line if we wanted. Continuing down to trend line and breakouts, we can see we have options for trend line. When enabled, this option will plot a trend line between the waves of the TS and signal line, which can be useful when using the indicator for trend trading. And right below those options, we have divergence detector. A divergence is when the price of the asset trends in another direction than the oscillator and can be an early sign of a trend reversal. Usually you would need to manually draw on the chart to find these divergences, but this indicator can automatically plot these divergences for you on the chart. Here we can see the price is making higher highs, but the oscillator is making lower lows, and this is a bearish divergence. We can execute based on this signal. Hidden divergences in this indicator are typically considered weaker divergences, so we will keep these disabled for now. One of the most basic ways of using this indicator would have you seek buys and sells when the markets are oversold or overbought. For example, here we can see that our analysis is bearish and we are seeking areas to take a bearish trade. We can use the oscillator to determine when the market is overbought within this bearish trend. As the oscillator retraces into this overbought zone, we can now wait for a sell, denoted by the red dot. Then set stops above the swing high, and we can hold until price runs back into an oversold region. For buy trades, we would do our analysis, and if our bias is bullish, we can wait for the oscillator to trend into an oversold level. Then once a green dot is plotted, we can take a buy with stops below the swing low and hold our trade until it runs into an overbought zone. Notice that we ignored the signals in between our entry and exit, as the indicator should be used to confirm your trade and not as a standalone tool. Another method of using this indicator would have you use the histogram to determine buying and selling pressure and seek divergences within those regions that align with the trend. For example, here we have bullish pressure in the market, denoted by the blue histogram. And we can see that a bullish divergence was detected. As long as price does not go below this divergence level, we can then wait for a buy signal for the TS and signal line. Taking buys with stops below the swing low and targeting a 1 to 1.5 risk to reward. Here is a bearish example. Here we can see that the histogram is plotting red, indicating selling pressure. Now we need to wait for a bearish divergence to be detected. Now that we have a divergence, we can wait for a sell signal. Keep stop above swing high and target a 1 to 1.5 risk to reward. Very easy. It's important to note that the divergences are delayed and as a result should never be used as the only entry condition. Now we are going to share with you a secret trading strategy that we have tested with this indicator on gold and several other FX pairs that you can start using today. But before we continue, don't forget to like and subscribe to not miss out on future videos, and if you would like to try the #1 premium indicator on Tradingview by Lux Algo risk-free for 30 days, you can use the link in the video description. Your continued support really helps the channel. For this strategy, we will be using the Signals and Overlays indicator. The Signals and Overlays indicator has been recently updated to use machine learning to optimize its signals and determine what signals are strong and weak using a rating value from 1 to 4. However, we will only be using 2 features from this indicator today. We will be using the Neo Cloud and the Trend Tracer overlay. So we went ahead and disabled all other options. Now here is the strategy. For buy trades, we first want to ensure that the Trend Tracer and the Neo Cloud is plotting bullish. These indicators are being used as our long-term trend detection tool. Next, we want to see that there was a bullish divergence and price has not returned to that low since. Price not returning to that area helps to confirm that the divergence was correct. Next, we want to ensure that the histogram is plotting above the 0 level, indicating bullish momentum. And finally, we want a weak or strong buy signal. We will take a buy and use the low of the Neo cloud to set our stop loss and target a 1 to 1.5 risk to reward ratio. This is a powerful trade since this setup has an incredible 5 layers of confluence. Here is a sell example. For sells, we want the opposite. Here we have the Neo cloud and trend tracer plotting red indicating long-term bearish trend. Next, we want to check for a bearish divergence and draw a line across ensuring price has not returned to this area. Once confirmed, we can then move on to seeking a sell signal with bearish selling pressure. It's important to note that the more confluences you have for an entry, generally the more likely the trade is to be correct. However, you can execute on this strategy with any 3 of the 5 confluences. This strategy can be used on any time frame below the 4-hour. We hope you enjoyed this video on the SMI of money flow indicator. Don't forget, if you would like to try the signals and overlays indicator by XAUUSD used in today's video, you can use the link in the video description where you'll get access to the oscillator matrix, price action concepts, and signals and overlays indicator all for 30 days risk-free, where you can try them to see if they are a good fit for you. Don't forget to like and subscribe to not miss out on future videos. Stay safe in the markets, and we will see you again next time.